Hi guys, welcome to Gold Price Daily Analysis. Today is Tuesday, 18th of June 2019. This video is brought to you by the coach. Remember, always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. I do urge you to check out the description of this video for the link of the Telegram room. At times when there are important updates or trading opportunities, we could reach you through the Telegram. Also, I do urge you to check out our last two videos in order for you to get the best of this video. We are going to start our core analysis as usual after a quick recap. On the last trading session of Monday, we have been waiting for important economic header to be released from the United States. It's the NY Empire State Manufacturing Index for June, and it came below forecast. For the gold price action on the last trading session of Monday, unexpectedly the US dollar opened on a huge gap down, which tells us that the Friday up move was fake in the US dollar. Dollar reversed back all of its gains on Friday, which makes sense. Who wants to stuck in the US dollar with expectations of a rate cut? Gold slid to 1,332 and recovered back to 1,340 plus, and last seen it was trading about 1,338. That's all. We'll move on now to the strategy recap. In the last episode, we advised selling gold considering the shooting star formation which we have had on the chart on the last trading session of Friday. By early trading hours, we advised keeping the stop loss as the enterprise because of the huge gap down in the US dollar. And later on, for those who did not close their shorts, we advised keeping the stop loss in front of the entry price as for expected reversal. That's all for the strategy recap. We will be moving on now to the economic calendar. On the economic calendar for Tuesday, we will start from the United Kingdom with the Bank of England Governor Carney speech to be considered as market mover. From UK to the European Union, we will be waiting for the following economic headers: ECB President Draghi speech and the core CPI year-to-year for May, and CPI month-to-month for May, and CPI year-to-year for May, and the trade balance. That's all for the European Union, all to be considered as market movers. Moving on to the United States, it's a big day as well, and we will be waiting for the following economic headers: the building permits for May, the housing starts month to month for May, and housing starts for May, and the red box with low importance month to month and year to year, all to be considered as market movers. That's all. We'll move on now to the technical indicators. On the last trading session on Monday, we have had a trading range from 1,332 plus to 1,343 plus. Numbers are rounded and the market is still open. For the closing price, gold spot is expected to print a close price above 1,339. Number is rounded and the market is still open. For the daily simple moving averages, gold is trading in a bull trend above its all daily simple moving averages. And for the RSI readings for the 30 minutes, it's 51 bullish with positive momentum, and for the RSI 1 hour, it's 48 bullish with positive momentum, and for the RSI 4 hours is 50 bullish, and for the RSI 1 day, it's 68 bullish, relieved from the overbought condition. For the supports and resistance, the first support is located at 1,337, followed by 1,332, then 1,325. This is a killing point. For the resistance, it's 1,341, followed by 1,346 to 48, and at the last 1,357. That's all for the technical indicators. We'll move on now to the trading strategy. Technically, gold is trading in a bull trend above its daily simple moving averages. The RSI readings are relaxed on all charts. Worth noting that technically and from a pure technical standpoint, gold holding ground above 1325 will be always looking and attempting to reach to 1357 and above, and below 1325 it will be looking and the attention will be focused on 1302. For the fundamentals and sentiment, markets' attention right now is totally focused on the FOMC meeting and the FOMC statement due Wednesday this week. The sentiment is mixed and the market itself is divided. Some sees that the Fed has a formula or a module to anticipate interest rates, and other parts still anticipate a change in the monetary policy, since Fed won't take the risk of being a reason for a recession. As we said, the FOMC statement is the center of the attention, and please understand one thing, that markets, I'm talking here about gold and equities, are not looking for the announcement of a rate cut on the coming Federal Reserve Bank meeting. Well, what they want is that the Fed stop using the word patient and to replace it with a phrase like they are going to do the needful to help the economic growth sustainability, or being the much they are dovish, the better for the equities and the gold. For the trading idea, there will be no advice from our side for this trading session and the coming sessions until the FOMC statement is released. Markets are going to be volatile and seriously volatile. But we are analyzing the market as we see from a technical standpoint. Gold price, as long as it settles above 1339, it will be targeting 1357. This is a level of equilibrium. The price could drop, but it should print a higher low above 1333. If prints a lower low, this means a breakup of this situation, of this formation. However, fundamentally, anything priced against the US dollar should appreciate, for the logic that the US dollar might melt down before the FOMC statement. 1324 could be the stop loss, proper stop loss for any trading. Thank you guys for watching this video. Please share, like and subscribe, and I will see you tomorrow in another video.